Hello, everyone. Welcome to People News, your go-to channel for the latest updates on global affairs. Today, we'll be diving into some of the most critical stories shaping our nation and the world. Let's get started. Vice President Kamala Harris accepted CNN's invitation to debate former President Donald Trump for a second time on October 23rd, despite Trump's statement at a rally in North Carolina that the proposed date is too late in the election cycle. Trump's campaign stated that there would not be another debate, pointing to his post on Truth Social rejecting the idea. He described the invitation as a desperate attempt to boost Harris's failing campaign and highlighted that it was too late for another debate due to ongoing voting. Trump also mentioned that he previously invited Harris to debate on Fox, but she declined. He criticized the timing of the proposed debate and highlighted the issue of voting already in progress. Although Fox News renewed its invitation for a debate between Trump and Harris, neither campaign has officially accepted. Despite CNN's statement expressing hope for a second debate between the two candidates, Trump reiterated his stance against it, citing that a rematch is unnecessary and emphasizing that he believes he won the first debate. The proposed debate would follow a similar format to Trump's debate with President Joe Biden and would last 90 minutes without a live studio audience. CNN stated that both Trump and Harris were invited to participate and that the American people would benefit from another debate between the presidential candidates. Overall, Trump's refusal to participate in the proposed debate on October 23rd and Harris's acceptance highlight the ongoing political tensions between the two rivals. Despite the eagerness for a second debate from CNN, it appears unlikely to materialize given Trump's firm stance against it. In campaign finance news, Kamala Harris's campaign outspent Donald Trump's campaign nearly 3 times over in August, with Harris spending $174 million compared to Trump's $61 million. Both candidates focused their spending on ads, rallies, travel, and staff. Harris ended the month with $235 million in her campaign coffers, while Trump closed out August with $135 million. Despite Harris's financial advantage, the race remains tight as they head into the final stretch before the November 5th presidential election. Both candidates are virtually tied in many polls, especially in key battleground states. In 2016, Trump managed to win against Hillary Clinton despite raising less money. Harris's surge in donations followed her entry into the race shortly after President Joe Biden endorsed her in July. The campaign saw an increase in funds, allowing them to allocate significant amounts towards TV ads leading up to the election. Additionally, Harris made a $75,000 donation to the Detroit Unity Fund, a nonprofit focusing on increasing Black voter turnout in Michigan. On the other hand, the Trump campaign ended August with $135 million, down from $152 million at the beginning of the month. Both candidates reported similar spending categories, with a focus on ads, rallies, travel, and staff salaries. Harris reported raising $190 million in August, while Trump brought in $45 million. The financial disclosures filed highlight the significant difference in spending between the two campaigns as they compete for the presidency. When it comes to media appearances, Trump and his running mate, Senator J.D. Vance, have conducted 56 interviews together, compared to the Harris-Walz ticket's 18 interviews. Vice President Kamala Harris has increased her interview appearances recently, but still lags behind her counterparts. Harris has been holding various interviews, including with Wired, a Spanish radio host, and the National Association of Black Journalists. Additionally, she appeared on Oprah Winfrey's show, which functioned more like a campaign event with celebrity guests. The Harris-Walz campaign is planning for more local interviews in swing states like Pennsylvania. On the other hand, Trump has appeared on various platforms like Fox News, including interviews with Elon Musk, Brian Kilmeade, and other media outlets. Meanwhile, Vance has done dozens of interviews since forming the ticket, including Sunday show appearances and interviews with major news networks. The Harris-Walz ticket formed on August 6th, and since then, Walz has also been participating in more local interviews across different states. Both Harris and Walz have ended their interview drought, with Harris speaking with CNN's Dana Bash and appearing on various radio programs like Euphoria and The Ricky Smiley Show. Despite the increased interviews, Harris has yet to hold a formal press conference, while Trump has held 3 extended press conferences in recent weeks. The former president has engaged with different media outlets, newspapers, and local stations, including Fox News, NBC News, The Daily Mail, and various podcasts. Likewise, Vance has made appearances on major networks like Fox News, ABC News, and CNN, among others. The difference in the number of interviews between the Trump-Vance and Harris-Walz tickets highlights the disparity in media engagement between the two presidential campaigns. Now, let's talk about the market. Warren Buffett's recent divestments in Apple and Bank of America have sparked speculation about the market's future. Despite these sales, Buffett's lack of significant purchases of entire companies in recent years suggests a lack of compelling value in the public markets. This does not necessarily indicate a negative outlook on the market or macroeconomic conditions. Buffett's decision to reduce holdings in Apple and Bank of America likely stems from the sheer size these positions had grown to. The overvaluation of Apple, relative to its growth rate, led to a need for trimming the portfolio. Similarly, the decision to trim Bank of America holdings may be a strategic move to ensure Berkshire stays below the 10% ownership threshold that triggers immediate reporting requirements. As Buffett, at 94, prepares Berkshire for future leadership transitions, his focus on maintaining a balanced portfolio and the realization that his successor will have final investment say suggests a shift in the company's strategy. This could mean a reduced emphasis on short-term trading of minority stakes in public equities, in line with Buffett's historically long-term and value-oriented investment approach. Nonetheless, investors can still draw valuable lessons from Buffett's actions, including the need to reevaluate heavily appreciated tech stocks, the appropriate valuation for quality investments, the implications of high cash holdings in a low-interest rate environment, and the potential impact of higher tax rates on investment decisions. Berkshire's recent profit-taking in megacap tech stocks also highlights the importance of diversification and portfolio rebalancing, especially as valuations become stretched. Overall, while Buffett's recent moves may not be a direct indication of market timing or economic conditions, they provide insights into the challenges faced by investors in a rapidly changing investment landscape. By learning from Buffett's approach, investors can navigate these challenges and make informed decisions that align with their long-term financial goals. Next, let's talk about the recent Federal Reserve interest rate cut, the first in 4 years. The Fed reduced the federal funds rate by 0.5%, aiming to combat inflation and boost borrowing. Key areas affected by the rate cut include consumer lending, the housing market, retirement portfolios, the labor market, and savings accounts. With the rate projected to decrease further, potentially to 3.4% by the end of 2025, this move offers relief for consumers, especially those eyeing home purchases or debt refinancing. Lower interest rates make it easier to borrow for big-ticket items like homes and cars, as consumer lending, specifically auto loans and mortgages, becomes more affordable. The housing market has already seen increased refinancing and home purchase activity, with pending home sales improving. However, while mortgage rates may decrease further, they are already relatively low, hovering around 6%. The rate cut's more immediate benefits are for borrowers carrying high-interest debt. Many consumers have seen rising credit card balances, and lower rates provide opportunities to refinance into more affordable products, such as personal loans or home equity loans. Credit card debt, however, may not be as significantly impacted due to the typically higher interest rates on these products. Experts suggest consolidating debt at lower rates to manage payments more effectively. The labor market, with a current unemployment rate of 4.2%, remains a focus for the Fed, which hopes the rate cut will encourage hiring and wage growth, while making borrowing cheaper for businesses. In terms of inflation, which rose by 2.5% in August, with core inflation at 3.2%, the rate cut aims to cool price pressures while stimulating the economy. Although slower economic growth is expected, the Fed does not predict a recession at this time. With more rate cuts anticipated, the federal funds rate could drop to 4.4% by the end of 2024 and 3.4% by the end of 2025. Investment portfolios and retirement accounts may experience mixed effects. While conservative savings vehicles like CDs and high-yield savings accounts might offer lower yields, equities generally perform well following rate cuts. Stock markets often rally as lower interest rates boost investor confidence, while bonds also tend to benefit in a low-rate environment, particularly for existing bondholders. Retirees relying on fixed-income investments should monitor their portfolios, as reduced interest earnings could affect their returns. However, with overall economic stimulation as the goal, the Fed's rate cut is expected to bolster borrowing, strengthen consumer confidence, and support business activity. If you're considering refinancing high-interest debt or purchasing a home, now may be a favorable time to explore options and take advantage of lower interest rates. The general sentiment is that while certain investments tied to interest rates may be negatively impacted, the rate cut provides needed relief to both consumers and businesses in the current economic climate.
with a broadening market.
Finally, let's switch to entertainment news. Sean "Diddy" Combs, renowned music mogul and three-time Grammy winner, is now facing public and legal scrutiny following serious allegations of sex trafficking and racketeering. On September 16, 2024, Combs was arrested in New York, accused of using his influence and power to organize freak-offs, events involving female victims and male sex workers, with accusations dating back to 2008. Combs has pleaded not guilty, but if convicted, he could face at least 15 years in prison. The indictment has led to significant fallout for Combs' career. Once a dominant figure in multiple industries, his professional empire is rapidly crumbling. He stepped down as chairman of Revolt TV and sold his majority stake in the company. A reality show deal with Hulu was canceled, and his popular fashion brand Sean John disappeared from Macy's website. Moreover, Combs lost key honors, including the key to the city of New York, his honorary degree from Howard University, and his association with Capital Preparatory School in Harlem. Footage from 2016 showing Combs attacking then-girlfriend Cassie in a hotel hallway further damaged his reputation, causing Peloton to pause using his music. Despite the legal controversies, Combs' music catalog remains available on major streaming platforms like Spotify, Apple Music, and Amazon Music. However, these platforms have yet to announce their future plans regarding his music. While Combs' business ventures have taken a hit, his musical legacy remains intact for now. Bad Boy Records, the label he founded, is associated with iconic 1990s artists like the Notorious B.I.G. and Faith Evans, and recently, it has seen Grammy nominations for Janelle Monáe's The Age of Pleasure and Machine Gun Kelly's Mainstream Sellout. Public reactions to Combs' legal troubles have been mixed. Hip-hop stars like LL Cool J and 50 Cent have weighed in, with LL Cool J expressing sympathy for Combs' children, while 50 Cent made light of the situation on social media. Shine, a former Bad Boy artist who served time in prison after a 1999 nightclub shooting involving Combs, expressed no joy in Combs' potential downfall, despite their troubled history. As Combs awaits trial, the future of his music remains uncertain, with many fans and industry insiders questioning whether to continue supporting his work. Despite his influence on the music world, the growing legal and public pressure could reshape the trajectory of his career. That's all for today's edition of People News. Thank you for joining us. Be sure to like, subscribe, and hit the notification bell so you don't miss any of our future updates. Stay informed, stay engaged, and we'll see you next time.